Hello there, I'm Vishwa. Today we're going to talk about how to trade with the trend and we are going to see a strategy for it. Now, finding a trend is really easy. Anyone can say whether the market is going up or whether it is going down. But finding the trend at its early stages is really important if you want to make serious money in the market. Because when you get into a trend during late stages, it is highly probable for you to lose money because the stock could be entering into distribution phase. And if you do not know at which phase the stock is currently in, trading with a trend cannot make you any money. So finding a trend is important, but catching the trend at its early stages is even more important to make money in the market consistently. And today, in the strategy, we are going to see exactly that. We're going to see how to trade with a trend by picking up trades very early on. So let's jump in. So what are we going to do in the strategy is we are firstly going to identify the trend. We're going to use some indicators for it. We're going to use moving averages, right? And once we identify the trend, and we're not talking about finding a trend after a 50 or 60% move has been made. Instead, we're going to identify the trend as it begins. When a new trend is arising, we will be there to look for entries. We will be there to find the opportunities. Okay. Once we identify the trend has started, we're going to be ready to take trades. And for this, we're going to wait for a pullback and enter at optimal point so that we can reduce our risk. So to reduce the risk, we are going to trade at the pullbacks. And finally, to exit the trades, once again, we are going to use indicators in order to remove any sort of subjective emotions during the trade. Since we are talking about trading with a trend, we have to make sure that we should be able to travel with the trend as long as possible, right? Because if you are a momentum trader, then it is possible for you to pick up a trade and book some small profits and get into the next trade as it comes your way. But in trend trading, this is not the case. You have to be able to travel with the trend as far as possible in order to make a handful of money. So we are going to use indicator to trail our stop loss to exit our trades to make as much money as possible in the trade. Now let's go on and see what are all the indicators that we will be using for this beautiful strategy. So coming to the next slide, we are going to use the daily time frame because since we are working with the trend, we have to make sure that the market is not sloppy, and also we have to make sure that the noise is reduced as much as possible. So we're using daily time frame in order to reduce the noise and to see the trend more clearly on a higher time frame. So both our analysis and our entry will be in daily time frame. We are not going to use multiple time frames for the strategy. And for indicators, we're going to use two exponential moving averages as well as two simple moving averages. We're going to use both the EMA and SMA for the strategy. And the values of the moving average would be 32 and 68 for exponential moving average and 81 and 100 for simple moving average. So in total, we're going to have four moving averages. And for entries, we're going to use candle pattern as confirmation. We're going to use momentum candles such as a strong bullish candle or a hammer candle in order to identify our entry points. So this is going to be a reversal type trading because we are waiting for a pullback and entering upon pullback, right? So we are not going to wait for the price to break out of the recent swing point or anything like that. So this is going to be a reversal type trading. And one good thing about reversal type trading is that you will be reducing your risk as much as possible. So this is how our strategy is going to be. So these are the basics about our strategy and indicators that we are going to use. And we are going to use one more indicator to exit the trade, and we'll see what it is as we move on. Now, let's continue with some examples to understand how this strategy works. So in this example, Siemens India, we can see that the stock is clearly in an uptrend. But if you're waiting for this whole up move for entering the trade, then you might already be too late. So as a trader, we are going to try and identify the trend as early as possible around this area when the trend starts. So let's see how we can do this. The moving averages here can give us a clear insight on when the trend is beginning if we apply a small trick. So here is the same Siemens India with the price removed, and we only have the moving averages, and the moving average bunch is enough to tell us whether a new trend is beginning. There are two things that you have to take note in the moving average. First thing is the crossover with the moving average. Whenever the moving average crosses over one another, like you see here, what it means is that the price is consolidating, right? Or it is trading in a range. Now, this is the first thing that you have to note before entering into a trending trade, because whenever a stock is going to trend, it needs a build up before the trend is going to happen. So this is the first step, and it's really important when you are going to look for a trend trading opportunity. And the second thing that you have to note in the moving average is this. Here in this area, you can see that the moving averages are no more crossing over one another. We don't see any kind of crossovers from this point on, right? So what it means is that the price is basically breaking out of this range slowly. That's what this area means. So this is what we're looking for. So from consolidation, the price is beginning to trend. That's what the moving averages mean. So what we see here is from the crossovers, the moving averages are finally orderly placed on top of one another. So what this means is that the price is ready to trend up. So these are the two things that we have to take note on in the moving average in order to identify the early stages of the trend. So the first one is that the price is consolidating, and we can find it from the crossovers in the moving average. And the second one is that the price is slowly recovering into a trend, and we can also identify this from the same moving average, because from crisscross the moving average begins to trade on top of one another. So these are the two things about the moving averages that tells us that the trend is beginning, that a new trend is being born. So this is the first step. We have now identified the trend, and now we have to wait for the entries. So basically we are waiting for the price to pull back into the moving average in order to find our entries.